there's so much tittle-tattle being discussed on programs like this about short-term movements, about the Trump election, about anything he can pull out of the hat in terms of getting him into the White House again. What investors really want is some certainty of which stocks will deliver for them on a 1 to 2 to 3 to 4 to 5 year view. And for that reason, Nomura, we published this big piece of research this morning. I hope the viewers can see, but this is what we call an anchor report. And we have done a deep dive into how companies around Asia can sustain and grow dividends, because that is something which in Western markets has been the focus of what we call global equity income funds. And a lot of countries, such as the UK, such as Germany, a lot of these countries are cutting dividends, having to raise equity capital. And for pension funds, mature pension funds, which is a big chunk of our investor base, they need income to match liabilities. A lot of people who are members of these pension funds, they're retired, they need income. And in order to produce that income, you need assets that generate income. So that's one of the things that our investors are asking about.
Can you give us a better idea then, Jim, of where you're directing them in terms of at least regionally or on a sectoral basis?
Yeah, sure. So in the past, what we've found is that companies in the US, companies in the UK, Switzerland, France, and Germany, these companies tend to adopt what we call the capital asset pricing model, which means that they've got quite efficient balance sheets. So what that means is that they take out some debt, and the reason they take out debt is that the interest costs of the debt are deductible against tax. So it's quite an efficient way to run a company. The problem we get, however, is if there is a downturn in demand and current trading is impacted, like what we've been through with COVID-19, then these companies' balance sheets are incredibly thin, and these companies therefore have to either raise more equity or cut dividends in order to sustain their businesses. So for that reason, we think that Asian companies, which are managed in a totally different way, they're much more conservative. We think it's time that global investors switched attention from Western markets to what we have in Asia. Now, in particular in Asia, we've identified China, Taiwan, Korea, and Japan as the most attractive countries from a balance sheet perspective. But most interestingly, from a dividend growth perspective, Japan actually is the real treasure of all of these different geographies. And for that reason, we think Japan is really an underdiscovered market by many Western investors.